Good evening, everybody. This is Dennis Wilborn of the Active Trend Traders. I've got a 2-minute update for you. It'll take a little bit longer than 2 minutes tonight as we work into some new features with active trend trading. But we're going to highlight 3 of the indices and a few stocks and one of the ETFs tonight, just to see how this current market weakness has been impacting the market and maybe some of the leaders that are in the market currently. I always want to remind everybody that all materials that are presented from Active Trend Trading are for training purposes only, and traders should always do paper trades in any new method or system prior to the risk of personal capital. Let's get going with a brief look at the S&P. What's the S&P telling us? Over the last few days, last several weeks, the S&P has been putting in what appears to be a topping type pattern, or at least a resting type pattern. We see that back here at the beginning of April, we start getting these dojis, which if you're a candlestick person, you know that dojis is a candlestick pattern that shows indecision. And so we see this indecision starting to come into the market. This uptrending channel that many of the indices are working within, the S&P failed to get all the way back up to the top of the channel, and then puts in this high up here just above 1880. And on Friday we get a downside reversal where it breaks to a new high and then reverses off in higher volume, and then follows the selling up today again, this time dropping below the 20-day moving average. It's a simple moving average, and the 8-day appears to be breaking below the 20, so we may get a moving average crossover here. As you can notice, the last time we had a moving average crossover to the downside was over in this area on the S&P, and it led to a pretty nice, if you'd like to trade to the downside, sell-off all the way down to the lower part of the channel. Will we get the same action here this time around? Nobody knows. We do see the stochastics are turning over, and momentum is starting to come out of the S&P. But today's action, we found support, and buyers came back into the S&P, bought the stocks that make up the index back up. But the price action still finished in the lower half of this price range today. Will we get a small wedge up and then a retest down at that 1840 to the 50-day moving average line as the next potential area to bounce? Time will tell. The NASDAQ shows a similar, or even a bit of a more significant weakness in that the earlier in the month it was showing much stronger. I can erase those. There we go, get all those drawings erased. But quickly, NASDAQ started showing its weakness, more significant weakness with these bearish engulfing signals that we saw here, and then proceeds to now put in what may be an expanding top or a rounding top. But it came down today, dropped the 50-day moving average, and then what did it do? It rebounded and actually closed above the 50. However, the volume was slightly lower than it was on Friday. We don't know if that has to do with Friday being a triple witching hour or expiration of options, if that's why the higher volume on Friday probably had a little bit to do with that. But we see that this large range down candle on the NASDAQ is showing that NASDAQ is weaker than the S&P. As we move over to the Russell, as you see, the Russell's got a similar pattern to the NASDAQ in that it may be the type of stocks that makes up the Russells. We have a lot of people taking profit today, while they say the economy is going well, Who knows? People just may need to be taking their profits, getting ready for tax season or whatever. Russell found support at this lower level where the swing low was and rebounded slightly. Didn't get close or didn't get close to the 50-day as the NASDAQ did, but still we see some significant selling, some dojis, and each one of the relief rallies, if you will, that the Russell, the NASDAQ, and the S&P did was basically on lighter volume, which is always suspect. And then last Friday, similar pattern, a downside reversal leading to more selling today. Again, momentum is coming out of the Russell. Will we continue down, or we may just bounce between this 1207 to 1210 level all the way down to 1170 level? Now let's see how a couple of the stocks, or several of the stocks that have been leaders over the last few months and even last few years did with this market weakness. We can see with Netflix. Netflix really was hammered over the last couple of days, dropping all the way from about 427, 428 down to its low today was just below 370. But it's an interesting inverted cup or a rounded top type pattern. And look where it stops today. It stops almost right at the upper side of this big gap or window, and it stopped there, did a little bit of a retracement and a bounce. What am I anticipating for Netflix? Clearly not in a shorting position right now because it's at a level of support. If this rebound continues, I would look for perhaps a wedge up or a relief rally where buyers come in, push it back up. But if that was in lower volume, I would look for that to be a bear flag, and then over several days, a break below that bear flag would take us back down to this level and then potentially below that. Note that the Netflix closed below the 100. So there's an old adage that says that the probability is increased to go and revisit a lower moving average once a moving average has been breached and with a close below that level. One of the other stocks that has been a favorite of many over the last several months is our good old buddy Facebook. Facebook, a little bit less weak than Netflix. However, we're still seeing that potential topping pattern with a rounded top. The moving average has started to swing down. A close below the 50. Again, is Netflix where we want to short it right now? No, not really. We would wait. We want to see some either a break below this about 63 level for a potential visit down in the 60 level or even down at the 100-day moving average. But as you can see from the chart, it looks toppy, but look what happened the last time I did one of these tops. It did a rolling top, bounced off the 50, and away it went, and then ran from 60 all the way up to 72.50. So will that happen this time? We just don't know. We wait for the candlesticks and wait for the patterns to shape up before we make any type of trading decision. Here's a stock that many have been trading, have jumped in from various levels all the way back to when it was trading at 45 and had a tremendous run over the last couple of years. However, after this, what is potentially an exhaustion gap where it gaps up big daily volume here, big volume on this buy up, then Tesla seemed to be running out of gas, excuse the pun. The 8-day breaks below the 20, and where do we visit? Right close to the 50 and it closed this gap up window, and so it broke that support which is typically strong support of the window. However, we did not close back down below it. What's up for Tesla? We're going to wait for the small body candles to show up, to show us what, to see if it'll start doing a little bit of a base, because Tesla is still in the long term is a great company. I love how they provide a lot of the electrical components for a lot of the other electric cars out there. So I don't think the wheels are totally coming off Tesla now, but we may have some continued profit taking over the next few weeks. The last chart I'll leave you with is a chart of TNA. This is a 3 times leveraged ETF that represents the Russell. I trade this ETF a lot because, one, it puts in great patterns, and secondly, it has great option open interest, and it also offers weekly options with good open interest on it also. I point this particular stock out to you today because to show the retracement, the Fibonacci retracements from the low here back on February 5th to the high in early April. Look where the retracements have initially been confined to. Up here, retracement back 23.6%. And today we get a retracement that almost hits the 38.2% retracement. There's this, what I call the magic fib box down here, which is the retracement between the 38 and the 61. Those can be considered normal retracements where you will get a pullback into this area here, and then the market forces will take, and either the buyers are going to come in and take it right back up, or we may get some basing down in this area, but that is not an abnormal area to expect a potential turnaround. If we bust below that 61, that increases the potential that we will make a full round trip all the way down to the bottom of the Fibonacci. So that covers the update for this evening, folks. I want to thank you for giving us a listen, and I encourage you, if you're not a subscriber, please sign up for our free bi-weekly newsletter called The Art and Science of Active Trend Trading. And then coming in April, we're going to continue something we started in the February time frame, but we're going to be moving this over to the Active Trend Trading. It's called the Midweek Market Sanity Check webinars and recordings, and you can find out more information towards the beginning of April on how to hook into those. And if you are interested in the art and science of active trend trading, please visit us at activetrendtrading.com. So until next time, this is Dennis saying, be a wise and profitable trader. Good night.